All right, let's look at the data. In the market, what you read is almost never what you actually get. You see, there's this constant battle between the narrative, the story they spin in the headlines, and the raw truth that's buried deep in the numbers. Today, we're going to decode a massive divergence that's playing out right now.
So right now, the financial media is absolutely saturated with fear. The story they're pushing is that the AI trade, the engine that's been powering this entire market, is completely falling apart. You've got headlines questioning if even a giant like Nvidia can hold it all together. This is the narrative you're being fed. And let's be honest, it's designed to grab your attention and make you anxious. But the actual data from the very same day tells a totally different story. Look at this. The Dow and the S&P 500 are both up about 1%. Okay, fine. But the real kicker? The Russell 2000, which is our window into a huge range of smaller companies, is up almost 3%. This is not a market that's about to collapse. This is what we call positive market breadth. It means the strength is spread out everywhere, not just propped up by a few big names.
So this brings us to the most important question, right? Why the massive disconnect? Is the media just straight up lying? Well, not exactly. The reality is that this divergence, this gap between the story and the data, is a classic market anomaly. It's a huge signal that something else is going on under the surface. And for a data-driven analyst, moments like these are exactly what we live for.
This brings us to a really core concept, separating the noise from the signal. See, reacting to every single scary headline, that's just chasing noise. It's emotional, it's reactive, and it's usually misleading. Our goal, what we're trying to do here, is find the signal, the real, actionable, data-backed information that shows us where the capital is actually going.
So let's define our target. We are hunting from market anomalies. Think of these as glitches in the matrix, those moments when the data directly, and I mean directly, contradicts the story. Now, finding an anomaly doesn't guarantee a win, but what it does do is give you a massive analytical edge. It tells you exactly where you need to start digging.
Theory is great, but let's make this real. Let's make it practical. We're going to dive into one specific company, STAA Surgical, the ticker is STAA, to see exactly how you can spot a powerful signal hiding inside all that market noise.
Okay, now check this out. While the broader market was supposedly panicking about AI, look at this data log. We're seeing a 10% owner, that means a major institutional shareholder, one of the big guys, making 3 huge back-to-back buys 3 days in a row. And these aren't small purchases. We are talking millions and millions of dollars every single day. This isn't noise. This is a crystal clear, impossible to ignore signal.
What we've just found here are institutional footprints. This is exactly how we track the so-called smart money. We don't do it by guessing or reading opinion pieces. We do it by following their actual capital, where they are really putting their money in the open market. This is the foundation of a real data-driven strategy. The scale here is it's staggering. Over $41 million deployed by one single entity in just 3 days. Let that sink in for a second. This is not a speculative bet. This is an act of extreme conviction. An institution simply does not commit that kind of capital unless their deep internal research is pointing to some serious upside potential.
So it's so important to understand why this data is so powerful. First, unlike a news article, this is done with real capital, real skin in the game. Second, it signals long-term conviction. These are not day trades. They're making a serious commitment. And third, and this is crucial, insiders and major shareholders have a level of knowledge about a company's real operations and its future that nobody on the outside can even come close to.
And let me be very, very clear about this. This is not about cheating or finding some secret illegal info. This is all public data right from SEC filings. The market is a game of information, and the big institutional players, they leave a trail. Learning how to read these data logs is a structural reality of the market that any retail participant can learn to use to their advantage.
So, how do we pull all of this together into a strategy, into a coherent outlook? Well, it's not about being blindly bullish or bearish. It's about building a framework that depends on the data, not on the drama.
This brings us to a balanced view. On one hand, the bull case is pretty clear. You have heavy institutional buying and positive market breadth. That suggests real underlying strength. But on the other hand, the bear case is also valid. You can't just ignore the negative headlines and the weakness in some key sectors. That could be an early warning sign of a market rotation or even a correction. A true data-driven approach means you have to weigh both sides.
So let's wrap this up. Here are the key takeaways. Number 1, headlines are just a story, data is the evidence. 2, actively hunt for those divergences and anomalies, that's where the opportunities are hiding. 3, follow the institutional capital flows, it is one of the clearest signals you will ever get. 4, stay data-dependent, not headline-driven. And 5, always manage your risk.
Now, of course, I have to state for the record that this analysis is purely for educational purposes. It's based on data that is current right now, as of this recording, and you know this stuff can and will change incredibly fast. It is absolutely critical that you always do your own due diligence.
So I'll leave you with this final thought. What contradictions is the market showing you right now? Look past the main stories, dig into the data, find the anomalies. That's where you're going to find your edge. Stay disciplined, stay liquid.
We are tracking these flows in real time, so while you analyze the next move, check out the tools in the description. You can sign up for Public to get $20 in free assets, check out Webull for that BTC promo, or look into Nvidia on Moomoo. All the links are down below, and hey, like and subscribe for more of this deep dive analysis.